How much impact is the situation in Hong Kong having on our grain trade here today? And if it is, maybe you can explain how that's working.
Well, it certainly is having an impact. We saw some headlines early this morning with regards to Chinese state companies being told not to buy some U.S. agricultural products. And that's really what started and accelerated the selling pressure there in the pre-markets, specifically in the soybean market, and then that spilled over into the corn and wheat. But we're starting to gain a little bit of attraction here. You know, it's just that type of environment that we're in, where there's just a lot of political rhetoric and a lot of job owning back and forth. And if you kind of zoom things out and look at the broader and longer term technical and fundamental landscape, you know, we haven't gone anywhere real fast in these grain markets. In soybeans, we've been trending sideways for the better part of the last 2 months. Export business has been good. So the market doesn't seem overly concerned at this point. I think there's been a tremendous amount of bad news already baked into the cake. So I do think that puts a little bit of the risk to the upside, probably more so in corn, just because of the fact that funds are short about 276,000 contracts, which is extremely aggressive for this time of year. If we get any sort of a weather scare with regards to heat, I think you start to encourage some short covering. And on the flip side, even if we don't get any new news, you know, there's risk to the upside because some of these funds could be looking to take some positions off the table and reallocate into a market that's moving a little bit more directionally.
Now, that's one thing that I hear from time to time when you change a calendar over to a new month like this. Sometimes you hear the term rebalancing thrown around, and I wondered if that is anything that is being used here early this month, or if that comes into play here in June or not. I wanted to take a look at our wheat market here. Let's go back to our quotes from bar chart here. We have the July wheat 3 3/4 lower in Chicago at 5.17, but it is off its earlier low by roughly about 5.5 cents. Kansas City wheat now down a dime again at 4.60 and you have the Minneapolis wheat currently trading 6 1/4 lower at 5.18 3/4. But what about that anyway?
Well, the wheat market's been, you know, in a downward transition, you know, really going back all the way to the end of March. It looks like we're trying to carve out a little bit of a bottom here. We are starting to mark higher lows and higher highs. There's going to be a lot of resistance for that Chicago contract at 5.30. That's going to be, I think, the inflection point for the market. If we can achieve consecutive closes out above there, I think that neutralizes the bearish technical setup, and we can see some momentum traders jump on board and take this thing a little bit higher. But I think there's going to be a lot of resistance technically and fundamentally the higher we go and the closer we get to 5.50.